Hello and welcome to 2021. This is Doc Severson for the ReadySetCrypto OMNIA trade of the day for Sunday, the 3rd of January. Hey guys, let me start off by saying it's pretty clear we're in the early stages of a runaway bull that we've been waiting on for the last 3 years. If we go out here to the log chart, let's just go to price only on the log chart. Let's try this again. And we'll go out to our monthly chart. This is our North Star that we've been looking for. And you can clearly see that we have broken from here. I mean, this is, I don't think it's in doubt anymore as if it ever was over the last couple of weeks. But we've seen now from this breakout above about 15,000, 14,000, 15,000, this area here is really the major breakout. And then, of course, once it got above 20,000, it's been accelerating. You can see this is the January candle. We're only 3 days into this, and it's already running away. And the importance of this monthly chart on the log chart really compresses everything and gives it better sense of scale. So if we have a similar move to this up to here, you can do the math, and we're looking at somewhere above 100,000 easily. Now, the problem is everybody's sitting on the sideline, underinvested or not invested at all, wondering when the pullback is going to come. I've already gotten lots of emails and Discord messages like, hey, when is the pullback coming? I don't know. Nobody knows. In fact, when we get into moves like this, these are the toughest technical situations that we run into. Technical analysis usually works really well during these periods when we have chop and moderate trends. I would say moderate trends. When we get into runaway trends, and we're certainly in a runaway trend right now. As you look at the daily chart, let's reset this. This is a runaway trend. We have no indicators that are going to be able to keep up with this or be able to look back on and say, well, when we had situations like this in the past, this is typically how it acted back then, so we can extrapolate that into the future. It's a fool's errand to do something like that. So I think our job these days is actually pretty simple. It's the accumulation of perhaps the top 5, maybe even just the top 2 coins when we can, and look for opportunities to acquire them. So I've started off this webinar series doing these every Wednesday, and I'll continue these. And the thought here is to kind of walk through the progression of this and then just keep going back over and over again, week by week by week. You know, in advertising, there is a saying called the rule of 7, that sometimes you need to see something 7 times before it sinks in and you get it, right? And I'm just going to keep doing this because I think the crypto world has gotten to be really simple after 3 years of going through hell and making everybody pay for accumulating down at these levels. Now the opportunity is there, but right now it feels really bad because you're sitting on the sideline and trying to find a way to get on board this. So there are certain tools that we can use, such as options, such as futures, and different strategies that we can use, whether it's fractal energy or just trend trading, or maybe even simpler options to that. Now, one of the things that I'm seeing is that constantly everybody is looking for alt season version 2, because I get it. Look, alts are generally cheap, and there's something that you can get for literally pennies for the coin and then watch them explode. And that's certainly one way to do that. But sitting around waiting for alt season, I think, is going to be very difficult, especially if Bitcoin continues to accumulate like this. You're going to have a very difficult time. You're going to be just going against the herd of all these things. You're going to be constantly pushing against that denominator, which is expanding the entire time. So I'm not going to be spending much time sitting there looking for altcoins that might moon. I think that's very 2017. I think the market opportunity right now is to stick with the big caps. Let's really just stay with Bitcoin and Ethereum. Everything else is going to be a derivative or going to be secondary to the leaders. So you can see right now, Bitcoin is up 4% today alone. Yesterday was a huge day. We're seeing an extreme move by Ethereum right now. So Ethereum has gone well past my target of about 800. And now we're sitting there looking at building out this enormous cup with handle pattern, which tops out at 1400. So this thing is on its way. It's already blown past 800. We have some minor resistance levels along the way, but eventually this thing should hit 1400 again and then build out the cup pattern. And then of course the upside target from something like this, and get used to seeing these because we're seeing these all over the place. So the upside target is about 1300 points above that, or about 2,700. So some of these astronomical numbers that we're seeing, but Bitcoin is by far going to be the leader, I think, going forward, just because of the supply and demand and the limited availability, limited supply of this coin. And we're also seeing a lot more BTC lost along the way, which is further declining supply. So I think we're going to see an epic move for our lifetime here at some point soon. Now, guys, I've already talked quite a bit lately about selling puts, so I'll continue talking about selling puts. So the game here is to sell a put option at a forward date. In this case, if we go out to maybe the end of February or so, that's roughly, right, 7 or 8 weeks or so. That's about the right time. And then what we're going to do is we're going to pick a price at which we'd be a willing buyer. If we go back over to the chart, we can see some of these areas. To me, I love the level of 24,000. Obviously, 20,000 is a huge level. So we can start to see some of these pivots along the way. And these will be good areas. Former resistance becomes new support. So 24,000 is a great level to sell at. We may not be able to get that, but we can still sell that level. We can sell that put. And if the price does come down to that level, then we might be assigned. So 24,000 is not available, but 25,000 is available. We can sell this option. For right now, it's going 1,600 by 2,100. We can negotiate in the middle of that and probably get something on the order of 1,700 for that option. There's open interest of 2,000 there. So there's certainly available liquidity. And so we would need to have 25 grand in the bank to accept 1 BTC at that level. Okay, so that's one way to get on board. Now, you can also play this with micro options. You can play this with basically, instead of 25,000, you can pay 250. You can buy $250 of Bitcoin, and instead of getting 1,700, you're going to get maybe $17 for something like that. But again, it's a way to start with a smaller account. You've got to get started somehow instead of sitting on the sideline saying, it's running away from me, I can't do anything. Rubbish. There's lots of things that you can do, but you have to do those within the scope of your own account size. So selling puts to me is one of the best ways to do this. Again, if we go back out to the chart, and if we look at this in the context of that $25,000 put option on Ledger X, here's the 25,000 level, right? So if we sell that put for whatever fraction of BTC that we're going to do it for, if the price ends up going higher from here, okay, we keep the credit that we originally received and we're not going to be assigned. So we won the trade, we keep that money. We can continue to do this on a cycle by cycle basis until we get assigned at some point in the future. If the price goes sideways, if the price goes even down somewhat, we're still going to be sitting there unassigned. It's only if the price comes all the way down to here through 25,000 or lower by the end of February are we looking at being obligated to buy BTC at 25,000. And of course, the fact that we got that credit means that we'll get a lower cost basis than 25,000 for that. So to me, this is one of the most effective ways to battle this runaway market is to sell puts. You'll have the confidence of watching these things either expire or maybe, just maybe, you'll get assigned on these. You'll be obligated to buy if you hang in there. Now, the other thing that I want to mention with this is that the higher strike price that you sell, the more you're going to get paid. So you might look at this and say, well, you know what? Look, I'm unlikely to ever get assigned. The price is never going to come down to 25,000 again. That's perhaps what you might believe. And that could be true. So what you can do is you can become more aggressive with that. So if we sell at something like the 35,000, you're more likely to get assigned and you'll get a bigger credit for that. So good deal on both counts. So there's 35,000, right? Which is well above where the price is. This is one of the problems with Ledger X, is that they don't have enough strike prices in here. But as you get closer and closer, so if we go to the end of January and instead focus on those, then we see that we have 25,000, 27, 30,000. So this is interesting. So for less time of obligation, we could sell that 30,000 put, and we'll probably get somewhere around $2,000 for that at the 30,000 level. So there's 30,000. If you are concerned about Bitcoin getting away from you, then pull in a big credit and stand in front of that freight train and see if you get assigned on the pullback. Remember, folks, no one knows when the pullback is going to show up. There's no indicator that I can pull up on TradingView that shows me when or where the pullback is going to happen. Typically, it happens at the conjunction of too many buyers coming on board, and all of a sudden they run out, and then something happens. There's a catalyst that scares everybody to death, and the price comes tumbling down, and everybody believes, and all the news is going to be out there is going to be negative, saying, oh no, Bitcoin, it's over. The government is going against it, or something happened in China. And you'll see this thing fall out of bed like nobody's business. And everybody will walk away from it and say, well, I didn't believe in that trade to begin with. So it's going to test your mettle. It's going to see your resolve all the way through on this when the pullback does happen. And so if you did sell a put down at 25,000 or 30,000 or whatever, you're going to have to ask yourself, do I still want to be in that trade? So this is the conundrum, right? This is the dichotomy of trading where you're so aggressive when the price is running away, but the minute that the price turns tail and starts coming down, all of a sudden that old lizard brain starts kicking in and starts making you doubt what your actions are. So you've got to write your plan down on paper and say, under all circumstances, this is how I will attack this position. Now, the other thing that you can do, just using standard technical analysis, you can do things like this. You can come along here and draw a fib retracement and say, okay, here's the major swing that we're seeing, and it starts down here and it goes up to here. And so if the price does come down to a 38.2 retracement or a 50% retracement, you can just sit there and put your limit order in play and just say, well, it's going to be here, or it's going to come down to here, or it's going to come down to maybe as far as here. So this is one way to do it. But the problem is with this method, you could end up going high and dry, right? If the price comes down to here and doesn't get to your limit order, if there's too many limit orders in front of you, if there's too much demand, you'll never get filled. You'll never see that buy wall get chewed through enough for you to get filled. This is why selling puts is superior to that. Either way, you're going to win with selling puts. Now, another way that you can attack this is to trade with futures. Futures, when the market is just screaming up like this, will give you very, very simple entries. Very simple entries. If you have an airtight trading plan, this will be relatively simple. Remember, trend trading like this, trading with the trend with futures is one of the easiest things to do. It's just not going to feel that right at the time. And the problem is you may not be there when the move occurs. Now, I've got all of this in the Futures Masterclass. What I've got here is a 5-hour chart, a 1-hour chart, and then a 12-minute chart. And you can use any 5x multiple that you want to for either of these. This is just what I showed in the program. You can speed this up. You can slow it down. I would just try to find a way to have a 5x multiple between all of these charts, and it does help. So basically what we're going to do is we're going to trade in the direction of the anchor chart swing. So we're going to see range expansion, range contraction, range expansion, range contraction, range expansion again. So what we want to do is we want to look for these times where the anchor chart, in this case, I'm going to put a big A over here, this anchor chart is all wound up, has got a lot of energy, has been going into a range contraction area. This is going to be an area that we want to get on as soon as possible from these. And here's another example of this, another high energy contraction area, and then we had an expansion from that. So you'll see this just happen over and over again in this stair-stepping manner like this. So the idea is that once we start to break from this zone of contraction, and a lot of times the contractions will start when we get into exhaustion, just like right now. So right now we have an exhaustion. It's highly likely that we're going to see this contract for the next, X number of hours or whatever it takes for this thing to build up the energy again, right? So what we're also using here to indicate trend is the Heikin-Ashi candlesticks. So the Heikin-Ashis, you want to stay with something that's obviously green in this case. And then from here, we're going to move over. So like if we look at this area here, and this is going to be the 2nd of January. So it's around this area here. You can see this break that occurred, this consolidation, this break that occurred from there. And remember, the hours are not going to be necessarily, this trades 24 hours a day, so it may not be a time where you're available. That's just the breaks with trading. But in this case, you can see the major break that occurred yesterday was the break above 30,000. And once it got above 30,000, it was gone. Now, if you didn't take that first breakout entry at 30,000, there was another one that you could have taken not long after that, after the pullback. See, the pullback occurs, and let's go over here to see what the pullback is. And this is our signal. This is our signal chart over here, the 12-minute chart, and this is the signal that we're looking for. We're looking for the RSI hook back in the direction of the major anchor trend. It's a very simple concept. We usually use what's called a 5X chart in the middle. The only reason that we use this is to make sure that there's enough energy to power the trend. In this case, we certainly did. And sometimes you can also use the 5X hook direction, trade along with that with the 1X entry. This is the 1X entry over here at 12 minutes. And here's your signal. So if you can't take the first one, and believe me, when these things get going, they just don't pull back very far to give you an entry. So here's your next entry. And of course, they're never going to come when it feels good. It's always going to come in an area where it feels bad. And the way that you can win with these things is to hold on as long and as far as you potentially can into the trend until it starts to change trend direction, which is usually indicated by an anchor chart, red Heikin-Ashi candles. This is the time more than likely to get out where that swing is exhausted. So this is another way to actively, this is active income. This is not something that occurs while you sleep. You have to actively get in here and fight for it. And the opportunities, typically the good ones, are not going to necessarily feel good. So you're going to have to go against your lizard brain instincts that will not serve you well in this market. So guys, this is just a couple of different ways. If you're trying to acquire Bitcoin or Ethereum futures trading is also available. If you're trying to acquire these coins, here's a couple of different ways that you can use advanced techniques instead of just buying the spot or just putting a limit order out there. There's ways to get ahead of the standard retail trader when it comes to trading cryptocurrency. Hope this helps. I know this is a little bit of a long one and we're kind of revisiting existing ground, but sometimes it helps to go back over some of the techniques and the methods that we use here at ReadySetCrypto that put us ahead of the typical FOMO hodler trader that has no skill behind what they're doing other than just to ape in. And that's not going to work for very long in this market. All right, guys, have a great weekend. We'll see you back here on Monday.